few minutes.
Good morning, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. Today's date is April 4th, 2023. This is the Morning Forex Technical Report where I take a look at the technicals that are driving the Forex market. So let's get started.
When the loan matures, we cannot refinance it.
Let's start by taking a look at the euro versus US dollars. You can see the market in the Asian session, we dipped to the downside and then moved up into this yellow area up through here. Now this yellow area was defined not only by these highs going back in time through here over the last few weeks of trading. So that
10 minutes time, we will be on the lookout
supported the lower end of this technical range.
April.
But if you go to the daily chart and you look at the different highs going back in time, way back here and even back through here, there are a number of different lows and highs. I guess I came in this yellow area through here, and that is what really defined the swing area more recently and in the past. And what did the market do? The market moved right into that swing area and trading here today. I found willing sellers. I've been talking about this level in some of my posts of late. So found sellers in that area, and we started to rotate back to the downside. We know it's seen out there, and as long as the traders can keep the price below that level, then the sellers are still in play. Now, saying that, they still need to get below things like the 100-hour moving average and the 200-hour moving average. 100 is the blue line right here, and that corresponds with this swing area through here, where we had again another number of different swing lows and swing highs coming in through this area here, both on the top side and the downside, as you can see. So get below 108.70 and down to 108.629, and then we'll look for the 200-hour moving average, comes in at 1.08418. That would be needed to increase the bearish bias. Now in trading yesterday, the price did move below both of those levels, but as you can see, when the market moved above the 200-hour moving average right here, what did we do? We found support buyers right against that 200-hour moving average, and the price moved higher. So all the technicals did their thing. We did move lower, but the technicals can reverse the other way as well. And when we saw the price move back above the moving averages, we saw the momentum build more to the upside. So battle going on between swing level up here, 100-hour moving average down here, and lower swing area. Let's look at the dollar yen next, and what we notice here on the dollar versus yen on the hourly chart is that the price high yesterday came right just short of the 100-day moving average. That's this step line through here on the hourly chart. It also stalled right near the 50% retracement. This is of this move down from this high over here to this low right here. The trend moved to the downside. So stalls against 50% retracement, 100-day moving average. And, you can even add these highs through here and lows through here, where the market stalled against those levels as well. So lots of resistance up there. Sellers leaned against that level. Why? Because risk can be defined, and risk a little to make more than a little. Those traders that leaned against that this level up here with a stop above here, benefited from this move to the downside. Then the move to the downside took the price below the 100-hour moving average into another swing area down here. And again, this has been outlined in previous posts here, but you can see a number of different times where the market found either swing lows or swing highs through here. This becomes levels that the market remembers, okay? It remembers these levels, and it comes back to them and uses these levels as either support or resistance. And so the market came down to that level, and in the early Asian session today, the market also tested that area before saying, we can't go any further. Started to see that we saw this big move to the upside right here on this bar right here, and that opened the door for the upside. Admittedly, we've been trading above and below the 100-hour moving average, and in the London and New York session, but we are so far staying above that 100-hour moving average. Currently testing it right now at 132.839. It's going to be a barometer for today's trading. Either the market's going to find some support against that, or going to break lower and maybe go down and retest this swing area down here, which was the floor yesterday and again today. So that's what I'm looking for in the dollar versus yen. Next, let's take a look at the sterling versus US dollar on the hourly chart, and similar to what we saw in the other analysis on the yen and the euro, we did find some support yesterday near this swing area, this lower swing area, and again, a number of different times where the market came down to that area, and the market rotated back to the upside, getting above the 200-hour moving average, getting above the 100-hour moving average, getting above back into this channel right through here, which defined the upper and lower boundaries for the sterling versus US dollar. And that opened the door for a retest of the high prices from Friday's trade toward the in the New York session, early Asian session here today. We did find additional sellers against those high prices. The market rotated down modestly, but stayed above this trend line right here, and then shot to the upside here, breaking above this swing area. Now we can see the highs through here defined part of that swing area. If I were to go to the daily chart and look back in time, this is like the euro versus US dollar, where you go back in time and you look at different levels, going all the way back to these levels through here. There. These are going back to months and months, and even into last year. And as you can see, the price broke above that area, which the high part came in at 124.45. So let's go back to the hourly chart, and we look at the hourly chart in the sterling versus US dollar. And here's that. Well, actually, it's around 47. Maybe it's a little bit, but you can see how the market had momentum above that swing area, and really shot up, broke above the top side of the channel here, the old channel, and moved up to a high of 125.20 before rotating back to the downside. You can see we're back in the channel, so there is somewhat of a failure up here that could lead to a rotation back down, or should lead to a rotation back down to the swing area, down between around the 22 level up to the 45 or 7 level. 47 level on the top side, down toward the 38.2% retracement of this move to the upside. So sort of tilting a little bit more to the downside in the sterling versus US dollar in early trading here today. Finally, let's take a look at the Aussie versus US dollar. The Reserve Bank of Australia did keep rates unchanged at 3.6% overnight. That was as expected, but they did keep the door open for further tightenings if the credit banking, things start to settle down and inflation remains high, things like that. So we did see the Aussie versus US dollar move to the downside here. We did come up and test the 100-day moving average both yesterday and today. The high price yesterday got up to 0.6789, so got within about 10 pips of the 100-day moving average. And in trading today, the high price reached a high level of 0.67894, so right near that high from yesterday, again around 10 pips away from the 100-day moving average, and the market rotated to the downside. We did move back below the 200-day moving average at 0.6750. That's going to be now a risk level for traders, as long as the price can remain below the 200-hour moving average. It's the green line in this chart. The bias probably tilted more to the downside here for the Aussie versus US dollar. Let's take a look at the hourly chart, see what that looks like on the hourly chart, and you can see how the price got close to the 100-day moving average and rotated to the downside. We are now testing a swing area. If I go back in time and look at this low right through, or that high right through there, this high right through here. Let me get on the arrow. It's much easier for me to do it. Highs, lows, break below, high. You can see, get the point here. Admittedly, there's some breaks to the upside that failed here. And in trading yesterday, the market rotated through that level. Now we're testing this level. We also have the 100-hour moving average at 0.67124 on the downside. That would be a target on it if this 0.67239 level can be broken. But 200-day moving average on the top side is your risk level for shorts. We'll see if that level can hold resistance and keep the downside momentum going here after failing at the 100-day moving average. So there you have it. A look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.